we remain well positioned to respond in a timely way.
People in the Telegram
to
are
potential
blazing.
economic developments.
This dude said,
Oh my god! Oh my god! Oh, baby girl!
Evolving outlook.
Baby girl! Baby girl! Let me see your dance. Let me see your twirl. 64 points.
holy shit.
I'm break even. I'm break even.
Discussions at this, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level.
Wait,
But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem.
Let's troll trade.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation.
The troll trade with me?
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting
the government shutdown will affect the economy. Well, no
With
shit, huh?
downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way
people in the Telegram
to
are
potential
blazing.
economic developments.
This dude said,
Oh my god! Oh my god! Oh, baby girl!
Evolving outlook.
Baby girl! Baby girl! Let me see your dance. Let me see your twirl. 64 points.
holy shit.
I'm break even. I'm break even.
Discussions at this meeting, there were
What else?
strongly different.
Oh my shit! Oh my days, baby.
A
Give me
further
that. Give me
reduction in
that.
the policy rate
Oh my
at the
days,
December
baby
meeting
girl.
Wait, Powell
is
just
not
said it
a
was
foregone
Bro,
conclusion.
somebody
Oh
said
my.
bullish for
Far from
Bonnie
it.
Blue. I'm done.
Policy is not on a
This is,
preset course.
bro, the inverse is 1 hour order block, bro.
At
Oh
today's
my
meeting, the committee
fucking
also decided to
days.
conclude the
Oh my
reduction of our
fucking
aggregate
days.
securities
The
holdings
sky
as
is
of
blue.
It's
December
a
1.
fat 1
Close my
minute
eyes,
view.
bro.
Our
Close
long-stated
my eyes,
plan has
bro.
been to stop
How
balance
big
sheet
is that
runoff
one
Oh my
and
fucking
reserves
days.
somewhat above the level we judge
Oh my
consistent with
fucking
ample
days,
reserve
bro.
conditions. And warrant today's decision to cease runoff.
Wait, you said something.
Over the 3.5
How it
years
says
that
tariffs
we've been
are
shrinking our
pushing up
balance sheet,
prices of
our securities
goods.
holdings have declined by
What are you saying right now?
$2.2 trillion. As
I
a
don't
share
know,
of nominal GDP,
I'm seeing it in
our
this
balance sheet
Telegram.
has fallen from 35% to about
Oh
21%.
my god.
In December, we'll enter the next phase of
my
our
God.
normalization plans by holding the size of our balance sheet steady for a time, while reserve balances
shit.
continue to move gradually lower as other non-reserve liabilities,
That's
such as
beautiful,
currency,
bro. That's
keep growing.
beautiful.
Bro, Jerome
We will
dumping,
continue
bro.
to allow agency securities to run off our
Bro,
balance sheet and will
Vincent did
reinvest
the
the
same
proceeds
thing.
from those securities
Who?
in treasury bills,
My
furthering
Vincent.
progress toward
Vincent,
a
he took that?
portfolio consisting primarily of treasury securities.
Oh, look, he a W trader, bro.
This reinvestment
got
strategy will
paper
also
trail.
help move the weighted average maturity of our portfolio closer to that of the outstanding stock
Oh
of
my
treasury securities,
god, dude, this thing is
thus
going
furthering
dumb.
the
Take out this
normalization
New
of the
York clothes, take out
composition
this London
of our
clothes,
balance sheet.
take out this, and come all the way down.
The Fed has been assigned two goals for monetary policy: maximum employment and stable
my
prices.
God.
We remain
Oh,
committed
I
to
know, we know
supporting
we know where prices are going
maximum
tomorrow.
employment, bringing our inflation
Holy
sustainably
fuck,
to our
hell.
2%
Wait,
goal,
where we going? Are we dumping?
and keeping
Or we going
longer-term
long?
inflation
Yeah,
expectations well
what do you think?
anchored. Our success
okay,
in
okay.
delivering on these goals matters to all Americans.
But I think we dumping.
We understand that our actions affect
if we
communities,
manipulate-
families, and businesses
Holy
across the
shit,
country.
bro.
Everything we do is in service to our public mission. We at the Fed will do everything we can to
Holy
achieve our
shit.
maximum employment and price stability goals. Thank
You
you.
about
Oh, it was
to
a
knock
124
on
point
the
road.
move.
I really could have full poured it and passed my eval, man.
Holy shit.
Nick Timmeros of the Wall Street
God
Journal. Chair Powell,
damn.
are you uncomfortable with how market pricing has assumed a rate cut is a foregone
Oh, look, no
conclusion in the
retrace.
next
It dumps
meeting?
all the way.
Well, as I just mentioned, a further reduction in the policy
Holy
rate at the
shit,
December
dude.
meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Every way from that is that we haven't made a decision about
Oh
December.
my lord.
And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks, and I'll just say that.
Damn, we going.
Some of your
But I
colleagues
told you we
framed,
going to the floor, man.
Last month and maybe today.
I actually took that short too.
What you
I had to
mean,
get on
risk
another
management
call. I took the
exercise.
short.
Oh my god, dude, it's going
Right
down,
now?
bro. Yeah, it's
Why
done.
That you've taken out enough insurance. Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it.
Dude, it's
is,
149 point
the-
dump
the-
right now.
The risks
Holy
to the
shit.
two goals, for a very long time, the
We
risk
take
was
out all this
clearly of
outside
higher
liquidity,
inflation.
man. We got equal
And then
lows
that has
kinda
changed
down
now.
here.
And as we saw
Retest this,
particularly
higher
after
time
we
frame
saw,
trend line.
after the July meeting, we saw the downward revisions in job
cow,
creation.
dude.
We saw a very different picture of the labor market, and it suggested that there were higher downside risks to the
Still
labor
break
market
even.
than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level,
What'd Jerome say?
needed to
It
move more
affected
in the
the,
direction over time.
the
of
unemployment rate
neutral.
affected the
If the two
economy?
goals are sort of equally at risk, then you ought to be at
No,
risk.
this is
One of
the
them's calling for
government.
you
The
to
government
hike and
shutdown
one
will
is calling
affect
for
the
you to cut.
economy.
So if that got back into balance, then you'd want to be roughly at neutral. So in that sense,
So
it
the
was a
terrorists
risk
are pushing up
management.
prices of goods.
And I would say the same about today, sort of the same logic. But as I mentioned, going
Holy
forward
shit,
is a
bro.
different thing.
Wow.
Claire.
Wait, you took that with me too?
Claire Jones,
Yeah, I
Financial
took this short
Times.
earlier.
Thank you for taking this question. We've
Imagine
just
people went
heard
long.
from you that
Oh, man.
the discussion in December and the conclusion of the discussion is not a
Oh, you said it was
foregone
gonna go long?
conclusion. I'd like to just dig into that
Never
a little
said
bit
that.
more about
I never
what
said
sort of
that.
arguments were brought up. Was
I never
there
say buy it,
any
though. I said
consideration,
that's
for instance, of the investment we're seeing in
There's
AI
so
and
much
some of
outside
the
liquidity down
generation
here.
of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody.
164
I guess I
points.
would say it this way. Once again, I would
Crazy.
just point out that we have the situation where
I'll get my
the
gambler.
risks are to the upside for inflation and to the downside for employment.
You want gambler?
We have one tool. It can't do
It's not really
both of
gambling
those.
when you
It can't
kinda have
do
a
both of those at once. You've got a very different
analysis about
situation.
it.
So you
gotta
have
wait.
some people have different
We do not
forecasts,
know.
right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And,
Are we
people,
inside information?
some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision.
Bro, you were
about
past the
this-
account,
about
but,
December. I always say
the funding
that.
would've
It's
been
a
up
fact
hella
that
good.
We don't make decisions in advance. But this is,
Oh,
I'm saying something in
not gonna
addition
lie.
here, is that it's not
Not
to be
asking
seen
how
as a
much I'm
foregone
gonna lie.
conclusion. In fact, far from it.
Can I just ask a quick follow-up on Q2?
How much you
How
up, man?
much of the funding
up,
pressures
dude.
we've seen in money markets are related to the U.S. Treasury issuing more short-term
God.
debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that that we
Holy
look for.
shit.
We actually
It's
have
created an order block
a
right
framework
there.
for
That was
looking
an order
at,
block. Right here for the dump.
the place we're trying to reach. What we said
This is the order
for a
block.
long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities
Oh, my
grow.
cousin did the same
So
thing.
this happened.
Your cousin
some
took
of it-
that too?
Some things have been happening for some time now, showing a
closed it.
gradual
No
tightening of
way.
money market conditions.
Your cousin
So
took
that
Only
that?
in the last, call it,
goes
3
at the
weeks
top
or
and then it
so,
dump.
you've seen
bro.
more significant
No
tightening.
way
And
he
I think a
took that.
clear assessment that we're at that place. The other thing is,
Is
the
Fed
balance
right
sheet
yet?
is shrinking at a very, very slow pace now. We've reduced it by half twice. And so there's not a lot of benefit to be holding on to get the last few dollars, because again, with the balance sheets, the reserve